Hi, I'm here today with Allen, and he's with A&E Lending. He's based out of Jacksonville. He's been in the business for over 30 years. And if you have questions, if you want to use Allen, he's a great resource. He can definitely help you with a loan. Allen, I have some questions for you today. So, the condo market has changed so much, as we know. And with that said, for example, in particular, this unit, the HOA fee was $1,000 monthly. Now it's up to $1,525 monthly, including the amenities and other things included. But my question is, someone that's looking for this, that wants to get into a condo with these great views, how does that affect their debt to ratio? How does that affect their overall costs? And what do they need to do to buy something like this, especially with how things have changed?
Yeah, so good question, Peter. Thank you so much for having me. So with the condo association fee, first of all, we have to identify the property that they're buying. And once we do that, of course, if it's a condo, there's almost always going to be a condo association fee. So even though it's not part of their monthly mortgage payment, it's included in their debt to income ratios. Okay. So we have to know what the condo association fee is. I've had people that didn't qualify. They qualified for a loan, but not for a condo because of the association fee. And hey, if you're willing to live there and you want to pay for the amenities, then you're going to have the income that's going to have to support that. And what we do is we look at, well, if you really want that property, is there some debts? If your over ratio are there some debts that we can pay off so that you fall within the debt income ratio? And it's not clear cut. The guidelines say 28 and 36. I've had them approved up to 56.999. So, we'll do what we can to make it work.
When you say you can do to make it work, I have a question about that. So let's say I have a buyer who's interested in this condo, but their debt to ratio is off. Is it possible to have the seller pay up front, say 6 months of HOA fees? Would that help with getting approval? Or there is some stipulation to that and it's not going to work?
Well, that's a great question because that's a good point you bring up.
Yeah.
So let's just say there were no seller concessions.
Yeah.
Absolutely. If the seller's willing to pay a concession. However, 6 months is probably not going to cut it. Maybe they just give them a concession to help offset some of their closing costs that's going to help bring down their debt ratio, so they can either take part of the money they were going to use for closing and maybe pay off a debt that was putting them over the guideline and not qualify, to now that debt's gone. Guess what? Now they qualify with the association fee. So there's another way to use seller concessions.
Well, thank you for that information. Hi, I'm back with Allen with A&E Lending. And Allen, so, pertaining to what we were talking about with the condo market and how the HOA fee has gone up, when it comes to insurance, I've noticed that now it's mostly Citizen. It's a government-backed insurance. And really, it gives the consumer limited choices of who they can use. Speculation, and from your perspective, how is this going to affect lending, the insurance, and how is this affecting the Florida market as a whole? What is your opinion on this?
Okay, so I'm a member of the Association of Florida Mortgage Professionals, and one of our biggest things is we're advocating with the governor to help us with making insurance affordable. Okay, because that's what it comes down to. Yeah. These insurance companies that your borrowers are currently with, including myself, they are raising the prices of insurance, and you haven't made a claim, and they raise the insurance and they don't even tell you. And the way you find out, your mortgage company sends you your monthly statement, and all of a sudden your payment went up $15, $18, $50 a month, and you're like, what's going on? Mine went up $400. I got a letter 30 days after I found out from the mortgage company that my insurance went up. Some people's insurance are doubling from $2,000 to $4,000. I had one go up to $6,000, and their initial policy was $1,800. The insurance company did not tell them. All of a sudden, they call me and going, what's going on? Hey, you're in a 30-year fixed rate. Your principal and interest has not changed. It's your taxes and or your insurance. And then I get them to get a statement, and we look at it, and there's your problem right there, because they're not going to be shorted on their escrow. So where are they going to get it from? From the borrower.
It's interesting you say, and with that said, I understand where you're coming from. How do you think this is going to affect property value? If we have this trouble already, it's really a crisis in the insurance as a whole, especially on the coast. But even being on the coast, on the ocean, indirectly, interstate, like if you're in Orlando, you're still affected. You're still paying either way. In your opinion, how is this going to affect the values of properties in the years to come?
Okay, so that's a good question, Peter. I don't think the insurance is going to affect the value of the property. I think I'll take that back. Indirectly, absolutely. Because what's going to happen is if these people can't afford their mortgage payment because of layoffs, okay, they're living paycheck to paycheck already, okay, and it is a 800 as you were, if a $60 payment is not in your monthly budget, what's going to happen? They're going to get scared, and they're going to say, I have to sell my house, or I might just let it go back to the bank, which is the last thing the bank wants them to do. And it goes back to the bank. Now all of a sudden your foreclosures are starting to stack up, and that's what I see coming, because I don't see any relief coming from the insurance division of the state of Florida, and we're just talking Florida. This is not just a Florida problem. This is nationwide. Okay, so indirectly it will affect values of the property. Meaning, if it goes back to the bank, they're going to sell it cheaper than what the actual market value is.
Well, thank you for the insight, Alan. I appreciate it. I'm back with Alan. Alan, so, we had this conversation. We touched on a bunch of topics when it comes to condos, insurance. One other question I have is, the economy has changed dramatically. I've noticed, and we've talked about it, that there's at least 3,200 foreclosures in the state of Florida. Nationwide, there is close to 38,000 as we speak now. Now, because of what's going on economically, globally, with wars, with interest rates being hiked up, with inflation, insurance in Florida, as we talked about, where do you think is another key factor? I understand that there's all these builders that have built these sub-communities and new homes that now they're dumping, causing the market to go in a spiral direction, because now they have to dump these homes, and they have these incentives that they give to people, like closing costs, warranties, upgrades, which is undermining the resale value of other homes, causing the prices to go down even further. And people are tired of this. Not only that, but they can't afford it. So there's a lot of foreclosures, but what do you think is the main culprit behind all of this when it comes to where the market's going with foreclosures, in your eyes being a lender? How do you see this, and is there a way out? Obviously, we know Adam Smith's invisible hand of economic supply and demand, and there's a lot of supply, and the absorption rate of how much is on the market at a time. But how do you see this on a nationwide perspective? How do you see this playing out in the United States? And do you think there's going to be more foreclosures and that number going up?
Yeah, well,
it's long-winded.
Yeah, it is, and as a local mortgage broker, and even as a loan originator with the bank, it's hard to get in with the builder. And if you get in with a builder, then you have to you have to stay on top of things with them. However, they're throwing out incentives that if you don't go with their lender, you can't get. So yeah, they're giving up part of their profit to put people in homes, because they're giving them a more incentive to move that property, because they want to move on and build more. And what's happening is the affordability, going back to insurance. Insurance is a big issue in affordability. But if the builder goes and pays it for you for the first year, now you're on your own after that. Guess what? If you can't pay it, these people will walk away, because it was handed to them. They really didn't have any skin in the game, and I hate to say that, but some do, and they're probably mad about the same situation. But the ones that don't and have it handed to them, it's easier for them to walk away than it is to fight and stay there. So affordability, and with the builders, they're going to keep building as long as people keep buying, and I see the foreclosures stacking up. Okay. it's coming, and just be prepared is all I can say.
Well, thank you for touching on that information. We appreciate it. So, Alan, I have another question. Going back to what we talked about with foreclosures, builders, does it make sense anymore for them to keep building like these new, like H.D. Horton and these other big conglomerate builders nationwide? Does it make sense for them to keep building even though we're in a downward spiral in the economy and, of course, in the housing market and getting approved and interest rates going up? Why do they keep building?
That's a good question, Peter. They keep building because, you got your good old boy out there. All he's ever wanted to do is build houses, and that's all he's ever done. And he'll give you a fair house for a fair price, okay, including the land. Then you got the ones that, I won't necessarily say greed, but they're trying to maximize their builder profit margin. And if they build the houses, and if you build it, they will come. That's what they say, right? If the house sits there, every month it sits there, it's carrying over on their line. So guess what? All of a sudden, my profit margin doesn't need to be X. I can give some more incentives, drop my profit margin because I want to clear my line of credit so I can go find some more property to build on. Yeah. Okay, so that's where you're at.
I see. And the ad, as a realtor, as a broker, I've dealt with resales in the neighborhood of one house being listed, and we had to drop the price because around the corner was a brand new subdivision that they were building, and we couldn't compete with that. And the problem is that those homes were selling, and then when the comps came in, the comparable market analysis and the values came in, it came in lower than what we were selling, so we had to drop the price to compete with that. And people didn't want a resale home that's been built 15 years ago. And we had to really drop the price. And the person was an investor. He lost money. It was trying to be a flip, and it wasn't a flip. So he walked away with a negative amount. And it just goes to show where property values are going, to add to what you were saying, Alan.
Yeah, and let me just add to that. Yeah. I talked to someone as recent as this morning, okay? And her credit is shot. I'm going to help her with her credit. However, she wants a brand new house. So I said, well, there's a loan for everybody. It's the terms I fight for, Yeah. So you might have to put a little bit more money down. If you want a brand new house, there's one out there for you. We'll find it. And fortunately for her, we'll get her credit right, but she's got the money to put down. Not everyone has the money to put down, and not every person will get the incentive that they need to qualify for that house from the builder. So we'll keep on keeping on, and we'll do what we can for the ones we can.
Cheers. So, Alan, going back to what we talked about, with where the market's going, this administration is either going to regulate or deregulate when it comes to interest rates, how business is being done. In my opinion, I really hope interest rates go down. It's going to help everyone in general. But when you drive the interest rates down, then you get inflation as well, because money becomes cheap to borrow. But we need to get the housing market moving again. Where do you think the Trump administration is going to take this real estate market, especially him being a real estate billionaire? Where do you think this is all heading?
Well, Peter, that's a good question. Trump didn't get to where he's at because he doesn't know what he's doing. He cut his teeth on real estate. He's been following his dad's footsteps since he was a kid. So he's doing everything he said he wouldn't do in his campaigning to gain the office of the president. And I think he's got a little method to his madness. I don't know what it is yet. I think he's going to break down as much as he can and then build it back up. I think he's learned from his first year in office that he can utilize his power, if you will, a little bit more than what he probably did or didn't do in his first term. And without getting too political, I'm hoping for the best. I'm going to grind it out. I've been doing it 33 years now, and I'll do it until they tell me I can't do it anymore. And let's hope that he's making the best decisions for us and for the people so that we can get to where we need to be, and that would be a stable environment and making not just America great again, making housing affordable again for everybody.
Yeah. Well, I agree with you, and only time will tell, and I'm really optimistic and things work out. Again, this is Allen with A&E Lending. Thank you for joining. Thank you for your input and your expertise. Please contact him. He can help you with questions, with lending, with a regular single-family home, a condo, and even commercial lending as well. Thanks so much, Allen.
Yeah, thank you for having me.
You're welcome.